The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 7th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Right now it's just fine. 877-927-6648. If you can't dial in, well, let your fingers do the walking. Go ahead and send me an email. Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 100 points. 24,241. S&P is up 10. 2638 is the print. NASDAQ 100 up 0.5%. Trading out at 63.24. Russell is up 0.6%, up 950 or 15.18. Semis are up just over 1%. 1245 is the print. You've got gold back $12, 1254. Silver's up 16 pennies. Trade out at 15.79. Lights recruit up 68 cents. Leading the charge here to the upside, no surprise. Bitcoin Investment Trust, dollar-wise, $148. Sage Therapeutics up $70 or 76%. They've cured something or been bought out. Alphabet or Google, that's up $14 or 1.5%. Bluebird Bio up $9. Vail Resorts off to a nice day. $230 is a print, up $9 or 4%. To the downside, it is Argon Inc. down $11, 20%. Hooker Furniture off 9% or $5. Madrigal Pharmaceuticals off about 6%. That's $5 or so to the downside. So plenty to look at. Of course, I want to look at what you want to look at, and that means we've got to go to our first let your fingers do the walking request. So let me open up the phone right here. This is from Warren in Denver, I believe. Well, Warren, yeah, you got Warren in Denver. And Warren, whoops, sorry about that. Oh, my God, where did that go? Oh. Well, it went off my screen because of what I did. But I know that what Warren wants to look at, because I already had pulled it up, was Consolidated Water Company. And I think Warren, you were just asking me. I know you're in the $9 area, I believe it was. 1310 is the print. And so if I just take a look at this chart here, we'll just start with the larger time frame chart. And as we take a look at it, you can really see that this equity here, for the longest period of time, I'll call it maybe. When I say longest period of time, we're going back into 2013, right? So this monthly chart really puts into perspective. Here, let me help that perspective a little bit more by just putting a yellow rectangular box around it. So as we take a look, here is your consolidation pattern. And Warren, you're up towards the top of that consolidation. At this stage here, I would say the top of the consolidation, really 1469. Now, this is a monthly chart. Last time price was up there was May in 2016. There was 1.5 million shares. So it's a thinly traded stock out here. And last month, price was pushing into that level, the top of the consolidation box nicely, but on light volume. A third lighter volume, 1 million shares versus 1.5. So this doesn't, the stock chart or the signals or the volume, the consolidation pattern, nothing is signaling to you and I that this thing is getting ready to break to the upside. That doesn't mean it can't. But you and I have to take a look at this and evaluate this chart based on the information that we have available to us right now. What this would, if this ever can, or when it does, because in one sense you might say this is accumulation going on here. I don't know about the fundamentals of this company. What we do know is the most fundamental thing are what our shareholders doing. And at this stage here, trading in between a range of, say, what was it, about 14 down to the 960. So you're in towards the bottom of that consolidation area. So we'll say kudos to you there. In order for this thing to really bust out, it needs to close above 1687. And it needs to do so, or you'd like to see it do so, with more than 2.6 million shares out there. I don't know what else really you and I can do in evaluating this chart. I mean, we look at the weekly chart, but it's best just to simply pull this thing back in time, even more so than what we're taking a look at here, just to put it all in perspective. And it's just, and that's why, whoops, wow, how the heck did I do that? Well, now that is a problem. I've got volume on the left-hand side of the chart. In fact, I am not certain how in the heck did I do that. Wowzer. There must be, that's wow. Let me see here. Well, now I just lost volume altogether. That's okay. We'll be able to rebuild, but I wish I knew how I did that, because it's kind of cool. I don't want to get rid of it. I'll just leave it here. Okay, so we're on this chart. Looks pretty nasty. Okay, so Warren, that's that's the best I think I can give you on Consolidated Water Company out there. Let me see. Larry sent an email. This might just be I don't know if this is a question or not. Discuss the current. Yeah, maybe I could discuss the current retracement on almost no volume on the daily time frame. But what's the symbol? I'll have to do this during the break. I'll go take a look at that. So we'll go back to Larry's question. Let's go take a look at what's going on inside the markets right now. Let's kind of just summarize relatively quickly out here. Let's take a look at the New York Stock Exchange. You got its advanced decline oscillator reading still below zero, minus 10.02. Nice rally so far today. Message here inside the New York Stock Exchange, sellers are the ones that are still in control. So this is suggesting to us right now, counter trend rally. Same thing that's going on inside the NASDAQ composite. You'll see that its advanced decline oscillator reading down below zero, minus 32 is the current number. Look, at the end of today's trading session, a close above the zero line, and then we may have a different signal. But right now, the message of the New York Stock Exchange, the message of the NASDAQ composite, is that of a counter trend rally. Inside the Dow, it still is bullish, has never lost that bullish tone out here. We've never seen the advanced decline oscillator reading down below zero. This tells us that it is buyers that are in control. And inside the S&P 500, folks, the number you want to write down on your pad of paper is 1064, $10.64. That's your 50-day exponential moving average. If you see a close below that, spot volatility index will get down to the 955 area or lower. That will then send the S&P 500 higher, or should. And if price closes back above 1064, well, the S&P 500 is in the hands of the sellers. That should help some of you that like to play those volatility vehicles. So when we get back, we'll go figure out what Larry wanted us to look at, and anything else that you'd like as well. Give us a call or let your fingers do the walking. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So, Larry, if you're listening, I cannot open up the chart. I know you sent me a Thinkorswim chart, and it's not opening up on my phone, so I don't know what symbol it is that you wanted us to take a look at. So please send another email. Just put the symbol in there, and we'll go take a look at the equity or the ETF or whatever it might be out there. So no other questions that I see on my plate right here. But let's go. One of our dinners had posted while we were just coming on the air that the ES Mini was in wave number 7. So let's go take a look at that and see if we can provide some information out here. And the interesting thing about these 7th inning stretches is just how well they work. At least you don't ignore them, but you still have to do some evaluation type work. Add some other tools to the mix out here. But if we take a look at the actual all-time high inside the ES Mini, it took place earlier in the week on Sunday night. So actually it was Monday at about 10 o'clock. And if we just simply start counting, and for those of you that aren't familiar with counting these waves out here, why don't you go sign up for Basil's class? That is tomorrow. I think that'd be the best way to do that. In fact, he will teach how to use a Chapman wave. I'm not teaching how to do that other than just simply trying to identify those 7th inning stretches. This one here inside the ES Mini, several patterns coming together at the same time. You kind of like that. You have the A to B equals CD that I'm drawing up on my screen. This was your 1-to-1 A to B equals CD. The exact number would have been 2620. Price didn't get down there. It got down to a level of about 2622. Now I am taking a look at the March contract for the ES, so that's going to be different numbers if you're still looking at December. But either way, the patterns would have played out the same. Price moving lower, doing less relative energy, 7th wave, about a 1-to-1 A to B equals CD. And so now the question is going to be, is there a 1-to-1 A to B equals CD to the upside? And we will know that. We may know that during the show, or there may not be at all. But if there is, your price projection, see, it almost hit a 1-to-1 A to B equals CD to the upside. That would have been 2646. The actual high so far during this 1-to-130 session has been 2643.75. We don't know if this is the 7th wave or not. You won't get that confirmation until the next 30-minute bar. If it makes a newer high, then it just simply extends itself out here. As we speak right now, you've got kind of a bearish reversal. You have a bearish reversal candle, the bearish engulfing candle out here. But we have 9 minutes and 9 minutes exactly left in this bars formation. Here's what we also know at this stage of the game. We have a rising price oscillator above zero. That's the bottom panel of my screen. And it will remain that way, rising, as long as it stays above Stevie's red line, 26.38, and a bit of change out there. So this move may not be over to the upside. You want to see a close below this 26.38 level. That's the first thing. The other thing we want to notice here is that we did have a nice low that came in. This was back at about 3 o'clock in the morning. This is last night. No, that was 2 nights ago, 3 o'clock in the morning. And now what we've made is in this potential A to B equals CD pattern, we have both a higher low and we have a lower high at this stage. I'm just really going back to these swing points out here. So it's not quite as definitive, but the first thing you want to see fall is price get down below Stevie's red line. And then what you want to do is take a look or pay attention to the TAS market profiles. Now, the current candle formation on a 30-minute chart you'll see is an orange color. That tells you and I that that on a 30-minute basis it's getting ready to form new profiles. They have not arrived just yet. When we get them, maybe we'll have them by the 1:30 session. I don't know. I just know that this is a signal that they are going to come. That'll give you some additional benchmarks to take a look at it. From a weekly standpoint, inside the ES Mini, no big problem. In the daily, you've got a new profile that formed yesterday. It's really equally distributed, meaning that center of the box looks like it's smack dab in the center. So it's not providing us with any information other than support or resistance. Support 26.12. So if you're right on your move down, you'll want to look for that as a potential target. And to the upside, resistance would be 26.57. Inside of the 240-minute time frame, you've got resistance at 26.45, support at 26.22. So hopefully that assists you with some good information out there. All right, so what do we want to look at out here? I don't see any questions. Oh, I know what we should go look at. Let's go look at gold at this stage of the game. And by looking at gold, let's take a look at this chart right here. And so gold is trading down at about 1254.30, near the low of the session out here, and doesn't look good for Goldilocks. Doesn't look good at all. If we take a look at the daily time frame chart out here, most of you are already familiar with the A to B equals CD pattern that may be unfolding here. And if that's the case, your A point is the September 8th swing point high. Your B point, let's say September 8th, yeah, September 8th. Your B point is the October 6th low, and your C point out here would be October 16th. And 1-to-1 takes you down into the 1213 area. But gold has recently rolled over to a new contract. I wonder if the number is a tad different if we go look at February. So let me do this for you here, because that's the and it is different. And that's so maybe not. Maybe it is. Maybe it's not. Let me redraw this A to B equals CD to the downside out here. Is it different? Nah, it's not. 12.12.90. So that's not anything to worry about. This is 12.13.20. So close, but no cigar out here. And at this stage of the game, it looks like that's what gold is doing, that it has further to move to the downside. Now, that's just the 1-to-1 A to B equals CD pattern. 1186 is not out of the question. Now, if it were to start moving down below the swing point of July 10th, then you're looking at some type of butterfly pattern that could form out here. And all we have to do is take a look at our Fibonacci expansions from the low of that swing point to the high from the September 8th time frame. And the 1-to-1.272, the butterfly pattern, really forms in the price area of 1186 to 1174. That would be your 1.272 butterfly pattern. No idea if it'll get there or not, but we do know that gold is below support, and at this stage here, you are likely going to head back to the swing point of July 10th. You break below that, that is where the butterfly action, you might get butterflies in your stomach if you're long out there, but that's where the butterfly action really begins. That's what's going on inside of gold. In the case of Silverado, if we take a look at silver, here you've got the A to B equals CD that is underway. Yesterday was a Tom DeMark combo count of 13. That has not stopped the descent of silver. And if we take a look at its A to B equals CD pattern, its price projection, whoops, come on, do this, work for us. There we go. And then we're looking at the March 18 contract out here. The 1-to-1 is not that much further down, 1565 out here, and that's going to take you back into the swing point from July the 10th out there. Now, that's just the 1-to-1. No idea whether that is where price will stop. Today is going to be a TD setup 8 count. That means tomorrow could be the 9 count out there, and sometimes 9 counts identify tops or bottoms. And you must say to yourself, why do you say that, Steve-O? Well, look at that top that formed right out here on June 7th. That was a Tom the Mark 9 count. Looks to me like a top. That was second one in a row. Good bowler. Steve Rhodes with TFNN. We'll be right back. We'll go take a look at Nugget for Ruby, who's in at 24.50. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So for Ruby in the Tiger's Den, Ruby Thursday, not Tuesday, wants me to take a look at Nugget. So, Ruby, I can only suggest that you are an aggressive trader. You are an aggressive trader. Now, the reason why I say that or suggest that is that gold, the gold contract, and the mining equities typically, reliably, typically trade in the same direction. And I can't find a bottom in gold. in any of the tools or signals that I use out there. So that says okay. And here's even a 30-minute time frame chart. And yeah, things are a bit stretched out here, but even on a 30-minute time frame basis, I can't come up with any kind of short-term bottom out here. So I just want to share that. That doesn't mean that one's not forming. It just means, hey, Steve-O can't find one. But let's go back to and instead of using the NUGT, and I'll show you why. Here's the nugget. Let me put it up on our screen for you. And then just let me give this a bigger time frame. Let me just go to the monthly chart out here. Because of all of the, here's your monthly chart for Nugget, which really says that at some point in time, Nugget would have sold for $17,458. Now, we know that's not the case. It's at 25 now. And this is because of all of the reverse splits out there. So my suggestion is not that you shouldn't trade these, but what you should really be doing is your work based around something like the GDX out there, which the Nugget is based off of, or maybe an indice, the HUI, the XAU, something along those lines out there to really help and assist with your trading decisions out here. And this is just simply because of all of the splits, reverse splits out here inside of Nugget. Now, GDX, if I put the monthly chart out here, you're not going to see that pattern. Right? You're going to say, hey, GDX, which legitimately did sell for at one point in time a high of 66.98, and right now you're at 21.64. That's legitimate versus when we take a look at the Nugget out there. So let's go back to the GDX, but on that 3 time frame panel chart out here. And just because today's candle is green, that only tells us where it opened and where it's trading right now. But that is not a bullish reversal signal. And I would suggest that price will continue going lower until we actually see the cavalry come in and generate some type of bullish reversal signal. Here's what we know about the GDX. It is trading inside its swing point that takes you back to July 10th, 2017. The high is 21.65. You're trading at 21.64 right now. You did get a rejection on price and volume yesterday because the volume was 43 million versus the 52 million out there. But that being said, if this closes underneath the 21.65, albeit on light volume, and it's going to be light volume today, you're only 16 million shares, you have a likelihood that this is going to go ahead and tag 20.99. And your stop, as you said, was below the low of the day today. So I don't know that it's worth the reward risk. If this ain't going to change trends and find a bottom here, this is going to trade up to 23, 24, or 25. That's the GDX. So the Nugget will do, its three-time value in essence of that. That doesn't mean you can't multiply times. But in any event, I just don't see the bottom out here. I don't see it on a short-term time frame in the 30-minute chart. I was hoping that I could to then support. Well, just because it's trading higher doesn't necessarily – it's really trading lower than where it was at yesterday. It's just trading higher versus the open out here. So I hope that assists you with the way that I look at it. It's very possible this is towards a bottom. It's got its rectangular consolidation too. It's been in a consolidation pattern in essence since the beginning of this year out here, but it's not at the bottom of the consolidation just yet. And if it does break through the bottom of that consolidation, well, then you have a measured move as to where price should head to, equal to or greater than that consolidating pattern. So to the downside, and that's the only thing we're really concerned with right now, if it breaks through the bottom, that's going to give you a price projection in the $16 area. But you got to do this one step at a time. But that first step right now, I don't see the reversal inside of the GDX as we speak. So I hope that helps you out. Now, we have a request, believe it or not, from the Dalai Lama. And I am serious. This is a request coming from Nepal. Inside the subject heading, it says specifically, request from Nepal. Oh, did I lose that too? Golly. What the heck? Where'd that run to? Okay, I know how to get that back. And this is from your good friend and mine, Alex, inside the Tiger's Den, who is in Nepal. He wants to say hi to each of you tigers and tigresses out there, and says he'll be back soon, but his soon, because he's kind of laid back right now, I believe, for him soon is March. That's still 4 months away, based on the way that I count on my fingers out here. But I hope he's having a great time. Now, he wants us, because he's listening in, right? The Dalai Lama could easily be sitting right next to him right now, folks, which is pretty cool. And he wants to look at JCI. So if we take a look at Johnson Controls out here, the question is, coming back soon by March, JCI looks good for a swing trade. Please advise if we are in the same boat. So we're going to go take a look at JCI, and we're going to focus here on the daily time frame. And here is the issue that you are dealing with as we speak right now. We're just going to keep this relatively simple out here, as simple as I can. Simple Simon. And if we take a look at the resistance zone for Johnson Controls, it's $38.28. Why do we say that? Because gaps are our friends. Period. End of story. To the upside, to the downside, because they create that window that helps to identify support or resistance. In the case of Johnson Controls, this gap down on the trading session of November 10th, and it did it with nice volume, 13 million shares out there. That means all the people the day before that bought between the price point of 41.17 and 40.68, their sphincter muscle was tightening up pretty good on November 15th. As price got down to the 35 level, 34.51 to be exact. Pretty decent hit, you know, $40 to 35. You'd have to be saying to yourself, I wonder if I made a poor decision. And then you might say, you might pray to the gods out there, the gods of price. Hey, if you just come back to my entry, I'll be happy to just simply take my cashola back. And so it's proven that this 38.28 level is resistance out here. Now, it's possible that those folks, so many of those folks, you know, have taken that bread off the table when price 2, 4, 6 days ago came back. You had a nice little hammer candle, Alex, back on the trading day of November 15th. The market made its bottom, in essence, November 15th. November 16th is when price took off to the upside. And it's possible that this is going to go ahead and form an A to B equals CD to the upside. But you know, and I know, and Dave Mason knows that this thing has to close above 38.28. It did that just for a brief period of time on November 28th at 38.53 out here, but it immediately got back underneath that level. Now, the last time up there was with some decent volume in this equity, 6.6 million shares, but you're pushing higher today with light volume, 2.7 million shares as we speak. So it's not going to be today. But my friend, from Nepal, you want to see this clear 38.53 sooner than later. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And I've just got to say, but wait, we've got more. Now, just for Alex, because he's a long way away, let's take he had mentioned a swing trade out here, but I want to put in your mind that it's possible that JCI is more than just a swing trade. Now, we know that it has some work to do to get above that resistance level. But what I do want to share with you is the following. We talked about it's a nice way to just kind of tie things together, and unless you believe there's coincidences, which most of us don't. If we take a look at, and the tools that you and I use out here to assist us with calling the markets out here, when it made its top, this is a weekly chart that we've switched to. So, you know, we've kind of gone beyond the swing type trade to say, hey, is maybe this a better trade than just a swing trade out here? And when it did make its highs back in December in 2016, price was rising, doing less relative energy out there. We had a Tom DeMark sequential count the week of November 18th. You had a TD combo count the week of November 25th out here. So all those things where you can identify potential changes in trend. There certainly was a change in trend. There was an A to B equals CD to the downside. That qualifies, if you will, as a Gartley buy pattern. And we'll go ahead and we'll draw that in on your screen for you. And it looks pretty much just like this. And it completed with the hammer candle. Now, this was kind of your textbook perfect 0.618 Gartley buy pattern. Now, when this made its bottom back here in January of 2016, I'm not going to look at the pattern, although it was very near to a TD setup 9 count. It did it with a hammer candle and then a gap to the upside. We take a look at the signals here in completing the Gartley buy pattern. It did it with a hammer candle, followed not by a gap up, but by a second hammer. So what this tells us, those two hammer candles, is telling us that there are a lot of traders that believe that that was a fair value bottom out here. Now, there's still a lot of work to do. And it also was a seventh wave move from its high out here. So a beauty in a Gartley buy. You still got troubles ahead, but you certainly know where your support is. And it's below, we'll call it the first hammer and that seventh wave move. This does not mean that it is out of trouble. But to me, this looks like a better trade setup for the longer term than just, in that case, you could swing for the fences, and that is for Johnson controls out here. Okay, so I just wanted to provide that. Yeah, it just needed the good thing about that break was it allowed me to dig just a little bit further into some other charts out there, you know, and when it showed me the patterns that you specifically love to trade out there. How I could not resist. So delete the draft out there. It's not supposed to be a draft. Okay, so let's go on to our next request out here. And Larry went ahead and sent another email. Let me see if we've got this symbol. IYT. Okay, perfect. So we want to take a look at the IYT. Those are the transports out there. Oh, we've got a caller on the line. We have to go to our caller first, and then we'll go take a look at IYT. Ron, is it Ron in Denver? Ron in Denver's calling. Ron, thanks for calling. Thanks for holding. Sorry about that. How are you today?
Great, Steve. Thank you for taking my call.
Sure.
I just wondered if you would take a look. I'm along the IWM calls, and I was just, thought the market would be higher through the end of the year, and but apparently it's pretty choppy along the way, and I just wondered what are your thoughts on the IWM?
Sure. So you threw a couple things out there, and one of those things was the choppiness out here. And with regard to the choppiness, it is very usual during the early part of December. So what we are seeing is normal, and I will show that to you here first, just so you kind of get a feel. Now, this is the month of December by trading day. I don't want you to pay attention to the 21st or 22nd trading day here. And what this really shows us is up through the first 10 trading sessions inside December, the Dow and so I'm going to use that as kind of the market, really is kind of go back and forth out there. So you're not necessarily seeing anything that is abnormal. Now, this is since the March 2009 bottom, the activity that we're seeing inside of December. So it's kind of normal. So I want to start with that. The second place that I want to go to with you, specifically with regard to the IWM, is taking a look at the futures contract. And the reason I want to take a look at the futures contract is because we have some reliable, what I consider to be reliable levels of support and resistance for you. Now, support is what was tagged yesterday, and that's the bottom of its daily profile. 1508 is the number, and yesterday's low was 1509. So we're good. Support has held. Ron, here's where you're going to find out if this thing is going to bust out and continue to head back to its all-time highs of just a few days ago, or whether this thing's going to kind of go back and forth. The price level that the Russell 2000 equity futures contract needs to close above is 1531.62. So far today, our high has been 1528. So we're really pretty close. This could continue to consolidate inside of this. If you were to see the Russell 2000 equity futures contract close below 1508, there could be some more problems. And if it closes above 1531, then your call options are looking very nice. And so that's what I would do.
What is the symbol for that futures contract for the IWM?
On most trading platforms, it's TF, and then in this case here, this will be rolling over as well. So you'd be looking at the March 18th. What I have up on my screen is a synthetic contract that I've made that better distributes the data to create these market profiles and actually using the current contract. But still, you can use those prices as a guideline. You can probably get that on just a CNBC app on your phone to see where the Russell 2000 equity futures contract is trading. So it's at 1530. And these profile levels here, Ron, are much more reliable than if I go to provide those to you inside of the IWM. I'll give them to you in the IWM. In the bottom, the equivalent, so to speak, of what we looked at in the TF would be 149.91. Yesterday's low was 149.95. So they're good, but I consider the Russell 2000 equity futures contract to be the better deal. It just is. But 152.23, I would suggest, is a number you're looking for the IWM to close above as well. And that's going to then help you to answer your own question. Is this thing getting ready to break out? But let's not forget that we're in a period of time here where the market itself kind of gives a little to the upside, gives a little to the downside, and it's not until the 11th trading session when basically inside of December things are free and clear, where you have 2, 4, 6, 7, 8 days in a row where prices typically move higher. Now, the actual 11th trading session in the month of December is going to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's not until December 18th, just to put it in perspective. Okay? So it's going to be towards the 15th or 18th when the market should kind of break free and continue its tradition of moving higher in towards the end of the year.
Super. Thank you very much for your time.
You bet. You bet. Have a great day. That was Ron in Denver. We get back from this break, we're going to go take a look at whatever the symbol was we had started. Oh, it was the one for Larry, and we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Wow, time flies. Time totally flies. We're in our last couple of minutes here. So to Larry's question, you want to take a look at the IYT. Larry, one of the things that I would suggest to you if you are in that trade is also pay attention to the actual indice, the underlying instrument in essence behind that being the Dow Jones Transportation. And as we take a look at that index out here, nice patterns that it made when it formed a top out here. If we take a look at it, that top, recent top, October 13th, made a nice little price relative strength divergent pattern, moves lower to create a nice little retracement. Actually was a Gartley buy pattern back on November 15th. It was really confirmed for us on November 16th. Now this has completed the 1-to-1 A to B equals CD when it got up to the 10,490 level. You've backed off just a tad. That says that 10,490 or the trading session from 3 trading sessions ago, that's your resistance zone. Price should make it above that. This should be more than a 1-to-1 A to B equals CD. It will continue with that thought process unless we were to see price close below 10,077 right now. I believe that the Dow Jones transports look like they want to head to the 10,781, maybe even 11,151 area. Now, if we go take a look at the IYT, why should we be so bullish on transports? Take a look at what they have done on a weekly basis. Last week, taking out swing points with 2 million shares. The last swing point had 565,000 shares. Before that, it was 900,000 shares. Before that, it was 2.9. Taken out with 2 million shares. This thing is on fire, as the song likes to go out there. So you've got a rather large, and I do mean rather large, A to B equals CD that could be forming out here inside of the transports. You say how large? I say from a weekly perspective, the IYT is likely targeting 211.89. You're trading out right now at 186.71. So nice trade for you, Larry. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear in mind, David White's up next. After David, Tom O'Brien from 3 to 5, Andy Heck from 5 to 6, and Basil Chapman all day tomorrow. Go over to the homepage of TFNN.com, folks. Check out the webinar that he's got. I know that you will love it if you can attend. Take care. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.